Question 1. With respect to a commercial building's valuation, an insured selects replacement cost coverage without meeting the required coinsurance provision. When the building sustains partial loss, the insurer pays significantly less than the replacement cost. What is the most likely explanation for this reduced payout? A. The building was underinsured, triggering the application of the coinsurance penalty. B. The deductible was applied more than once due to multiple locations. C. The property was covered under actual cash value, not replacement cost. D. The loss involved excluded property, thus voiding full payment. Answer. Correct answer. A. The building was underinsured, triggering the application of the coinsurance penalty. Explanation. When an insured opts for replacement cost coverage but fails to insure the property to the specified percentage, often 80% or more of its replacement cost, the coinsurance clause reduces the claim payout proportionally. This clause exists to discourage underinsurance, according to ISO forms in the New Hampshire Insurance Department guidance. If the insured does not meet the minimum required coverage, the insurer pays the pro rata share of the loss using the formula payment equals amount carried amount required x loss text payment equals left frac text amount carried text amount required right times text loss payment equals amount required amount carried x loss. This is not related to deductible application. B. Valuation basis error. C. Or exclusions in the case. Question 2. When considering the business income coverage under a commercial property policy, what is the primary function of extra expense coverage? A. To reimburse the insured for permanent equipment upgrades. B. To cover lost profits due to business interruption. C. To pay for temporary relocation and operational continuity expenses. D. To fund reconstruction of the building to code standards. Answer. Correct answer. C. To pay for temporary relocation and operational continuity expenses. Explanation. Extra expense coverage under business income coverage pays for necessary expenses the business incurs to avoid or minimize suspension of operations, such as relocating or leasing temporary equipment. This is distinct from loss of income coverage B, which reimburses for net income lost. Per ISO CP 030 in state guidelines, extra expense does not cover capital improvements A, nor is it designed for code upgrades D, which may be addressed through ordinance or law endorsements. Question 3. As demonstrated by a claim involving Is Reynolds, a commercial building owner, she suffered damage to a rented structure due to a mechanical explosion. Her equipment breakdown policy was active. However, her claim was denied because the faulty boiler was improperly maintained for years. Why was this claim likely denied? A. Mechanical breakdown is excluded under most property policies. B. The insured failed to schedule the boiler under the declaration page. C. Lack of proper maintenance may be considered negligence, voiding coverage. D. Explosion is a peril only covered under broad form, not special form. Answer. Correct answer. C. Lack of proper maintenance may be considered negligence, voiding coverage. Explanation. Equipment breakdown coverage covers sudden and accidental mechanical or electrical failure. However, if the damage results from wear and tear or lack of maintenance, it is generally excluded. ISO form EB 020 explicitly excludes losses due to improper maintenance or gradual deterioration. This reinforces the insured's duty to maintain equipment in working order to preserve insurability. The issue is not whether the boiler was scheduled B or the explosion peril coverage D, but the cause of the loss. Question 4. During the process of adjusting a property claim, the adjuster discovers that the insured filed a similar claim 2 years ago involving identical damage in the same location. Which of the following producer actions, if taken, would be considered a violation of ethical standards? A. Advising the insured to document the loss clearly and provide receipts. B. Encouraging the insured to withhold past claim history to avoid denial. C. Suggesting a public adjuster for independent damage assessment. D. Reviewing the previous policy's terms to determine historical coverage. Answer. Correct answer. B. Encouraging the insured to withhold past claim history to avoid denial. Explanation. This constitutes misrepresentation, violating New Hampshire RSA 417(4), which prohibits any fraudulent or deceptive conduct by a licensed producer. The producer's fiduciary responsibility includes full disclosure and honest dealings. Advising client to misrepresent facts could result in license suspension, revocation per the New Hampshire Insurance Department. A, C, and D are ethical and acceptable practices. Question 5. From the perspective of Mr. Daly, a contractor who transports his tools between multiple job sites, what coverage best protects his tools while they are in transit in his truck? A. Business personal property under his standard commercial property policy. B. Commercial auto liability coverage. C. Inland marine coverage tailored for contractors' equipment. D. Garage keepers' legal liability coverage. Answer. Correct answer, C. Inland marine coverage tailored for contractors' equipment. Explanation. Commercial inland marine insurance provides coverage for property in transit, including contractors' tools and equipment, which are often excluded under standard business personal property forms. The commercial auto liability, B, only covers third-party bodily injury or property damage, and garage keepers, D, is for businesses storing client autos. Inland marine is governed under nationwide marine definition and recognized in ISO centimeters forms. Question 6. According to recent studies, adding an additional insured endorsement to a commercial general liability policy is common in contract negotiations. What is the practical effect of this endorsement for the additional insured? A. It allows them to make changes to the policy without the named insured's consent. B. It provides them with the same rights and obligations as the named insured. C. It extends liability coverage to the additional insured for claims arising from the named insured's operations. D. It makes them financially responsible for policy premiums and deductibles. Answer. Correct answer. C. It extends liability coverage to the additional insured for claims arising from the named insured's operations. Explanation. An additional insured endorsement gives third parties, like contractors or landlords, liability protection for claims arising out of the named insured's work or operations. This is often required in contractual agreements. Per Ives CG 2010 and legal interpretations, it does not grant policy A nor full rights, B, and it does not shift premium responsibility, D. Question 7. Given the circumstances, is Nguyen a florist, operates a small business from her leased shop and wants to purchase insurance that covers her inventory, equipment, and liability in one efficient policy. Which policy type best fits her needs? A. Business owner's policy, BOP. B. Commercial auto policy. C. Ocean marine policy. D. Directors and officers liability. Answer. Correct answer, A. Business owner's policy, BOP. Explanation. The business owner's policy, BOP, is designed for small to medium-sized businesses like Is Nguyen's, offering property liability and business interruption coverages in simplified format. Per ASA BP 03, BOPs cover business personal property and operations liability, ideal for retailers. Commercial auto B and ocean marine C are unrelated, and DOD's governance-related liability. Question 8. By evaluating Mr. Jenkins's claim after cyber attack that caused both data breach and business interruption, which type of coverage would respond comprehensively? A. General liability insurance. B. Professional liability EO. C. Cyber liability insurance. D. Inland marine insurance. Answer. Correct answer, C. Cyber liability insurance. Explanation. Cyber liability insurance covers a range of cyber risks, including data breaches, ransomware attacks, business interruption due to system failure, and third-party liability. General liability A does not address electronic data losses. EOB covers professional negligence, not cyber attacks. Inland marine D covers physical items, not digital risk. Per NAIC cybersecurity guidelines, cyber liability is the appropriate coverage. Question 9. Throughout the course of reviewing a policy with coinsurance requirements, the insured asks the agent to explain why their claim payout was reduced even though the total loss was much less than their policy limit. Which principle should the agent reference? A. Law of large numbers. B. Coinsurance clause. C. Indemnity principle. D. Risk pooling doctrine. Answer. Correct answer, B. Coinsurance clause. Explanation. The coinsurance clause penalizes the insured if the amount of insurance carried is less than the required percentage of the property's replacement cost. Even with partial losses, the insurer uses formula to determine reduced payment. This encourages adequate insurance amounts. The law of large numbers, A, and risk pooling, D, are actuarial tools, while indemnity, C, limits recovery to the actual loss but doesn't reduce it based on underinsurance. Question 10. In light of recent developments, Mr. Alvarez, the CFO, a publicly traded corporation, is named in a shareholder lawsuit alleging financial misrepresentation. Which commercial insurance policy would most directly respond to this situation? A. Commercial general liability. B. Professional liability (EO). C. Directors and officers (DO) liability. D. Commercial property insurance. Answer. Correct answer, C. Directors and officers (DO) liability. Explanation. Directors and officers (DO) liability insurance protects corporate executives against claims from shareholders, regulators, and others related to mismanagement, misrepresentation, or breach of fiduciary duty. Per SEC standards and ISO Form NG080 DO response to such lawsuits. CGLA covers bodily injury, property damage. EO. B. Professional services and property insurance. D. Covers physical assets. Question 11. When evaluating the merits of a policyholder's commercial auto claim, the insurer finds that the vehicle involved was designated with symbol 7 on the declarations page. What is the most accurate interpretation of this symbol's implication on coverage? A. Coverage is provided only for specifically described autos listed in the policy. B. Coverage applies to all autos owned by the insured and any hired or borrowed autos. C. Coverage includes any auto used in the business, regardless of ownership. D. Coverage applies to autos the insured newly acquires, regardless of listing. Answer. Correct answer. A. Coverage is provided only for specifically described autos listed in the policy. Explanation. Symbol 7 used in the business auto coverage form ISO 01 restricts coverage to specifically described autos listed in the declarations. It does not automatically include newly acquired autos unless the insurer is notified within the required time frame. Symbols like 1, any auto, or 2, owned autos offer protection. This distinction helps insurers manage risk exposure under commercial auto policies. Question 12. To illustrate this point is Carter owns the downtown bakery and suffers loss of income after a neighboring construction accident damages her supplier's facility, halting ingredient deliveries. Which of the following endorsements would best respond to her situation? A. Utility services. Time element. B. Extra expense coverage. C. Dependent properties. Time element. D. Ordinance or law coverage. Answer. Correct answer, C. Dependent properties. Time element. Explanation. This endorsement covers loss of income resulting from physical damage to a dependent property such as a supplier, manufacturer, or delivery hub. In this case, is Carter's business income loss stems from covered cause of loss at her supplier's location. Per ISO CP 15.8, this is the exact scenario the endorsement is meant to protect against. Utility service A applies to our, not third-party damage. Extra expense B covers costs to continue operations, not lost income from suppliers. Question 13. From a practical standpoint, what is the most appropriate coverage for a tech company transporting high-value laptops across multiple states by third-party carriers? A. Commercial auto physical damage coverage. B. Inland marine transportation floater. C. Equipment breakdown coverage. D. Business personal property endorsement. Answer. Correct answer B. Inland marine transportation floater. Explanation. Inland marine transportation floaters are ideal for covering high-value, mobile property in transit, especially when shipped via third parties like FedEx or UPS. This policy addresses non-fixed location exposures per ISO centimeter 01 and the nationwide marine definition. Commercial auto A wouldn't apply unless the tech company owns and operates the vehicle. Equipment breakdown C. BPP. D. Do not provide mobile transit protection. Question 14. Considering the evidence a policyholder submits a claim under their commercial general liability policy for damages caused by a subcontractor's work that failed post-completion, which clause is most relevant in determining whether this claim is excluded or covered? A. The pollution exclusion clause. B. The product's completed operations hazard. C. The fellow employee exclusion. D. The employer's liability exclusion. Answer. Correct answer. B. The product's completed operations hazard. Explanation. Coverage under coverage of the CGL policy includes the product's completed operations hazard, which addresses liability for work completed away from the insured's premises. However, defective workmanship may still be excluded depending on the policy's wording and any applicable endorsements. GCG 2294. The cause helps determine liability. Coverage for damages caused by completed work. Pollution, A. Employer liability. D. Or employee-related exclusions. C. Are unrelated in this context. Question 15. In the context of New Hampshire's regulatory standards, which of the following would constitute an unfair trade practice by licensed producer? A. Explaining policy options in detail using marketing materials. B. Rebating portion of the commission to attract large client. C. Collecting premiums and forwarding them to the insurer within 48 hours. D. Asking clients about prior claims to assess underwriting risk. Answer. Correct answer. B. Rebating a portion of the commission to attract a large client. Explanation. Per RSA 417(4), rebating, offering part of one's commission or anything of value not stated in the policy, is classified as an unfair trade practice in New Hampshire. It creates discriminatory pricing, undermines market fairness, and can result in disciplinary action. Other actions listed, A, C, and D, are legal and fall under appropriate producer conduct. Question 16. As evidenced by Ista Santoro's commercial property claim, he asserts coverage for debris removal after tornado. The policy limit was exhausted by the building repairs alone. What must be present in the policy for Ista Santoro to receive additional payment for debris removal? A. An ordinance or law endorsement. B. An additional debris removal limit provision. C. Scheduled inland marine floater. D. Flood insurance endorsement. Answer. Correct answer. B. An additional debris removal limit provision. Explanation. Under ASO CP 010, the standard policy includes a basic debris removal limit, typically 25% of the loss. However, if that amount plus the loss exceeds the policy limit, only the additional debris removal limit, often $25,000, allows for further payment. Ordinance of Law A applies to code upgrades, and C and D are related to debris removal. Question 17. From multiple perspectives, how does the commercial property special cause of loss form provide broader protection compared to the broad form? A. It covers named perils only but adds power failure. B. It covers only risks that can be reasonably anticipated. C. It provides open peril coverage subject to exclusions. D. It expands coverage to include employee dishonesty losses. Answer. Correct answer. C. It provides open peril coverage, subject to exclusions. Explanation. The special form ASO CP 1030 provides open peril coverage, meaning all causes of loss are covered unless specifically excluded. In contrast, the broad form CP 1020 lists named perils only. This distinction is critical in evaluating how losses are adjusted. Employee dishonesty D is not covered under either unless endorsed under crime coverage. Question 18. With the advent of cyber attacks becoming more sophisticated, businesses now require coverage beyond basic general liability. Which of the following perils is most uniquely addressed by a dedicated cyber liability policy? A. Premises liability for customer slip and falls. B. Defamation through advertising. C. Unauthorized access resulting in ransomware extortion. D. Electrical fire damage to computer equipment. Answer. Correct answer. C. Unauthorized access resulting in ransomware extortion. Explanation. Cyber liability insurance specifically covers network security breaches, including ransomware, data breaches, and extortion. This exposure is excluded under most general liability and property policies. Slip and falls A and defamation B are addressed under CGL coverage, and B, while fire damage to physical property D is under property forms. Question 19. A critical examination of the legal obligations between a commercial lines producer and their client reveals a fiduciary relationship. What best characterizes this fiduciary duty? A. A duty to follow only the insurer's directives and withhold client disclosures. B. Duty of loyalty, honesty and full disclosure to the client. C. Duty to prioritize commission generation. D. Duty to underwrite policies on the carrier's behalf. Answer. Correct answer. B. A duty of loyalty, honesty and full disclosure to the client. Explanation. Produces a fiduciary duty to clients, including disclosure of all relevant material information, avoiding conflicts of interest, and acting in good faith, according to New Hampshire's insurance regulations and the NAIC Producer Licensing Model Act. Any action inconsistent with this duty, such as they, C or D, can lead to penalties or suspension. Question 20. The foundation of a commercial general liability policy's defense obligation lies in what fundamental insurer responsibility: A. To settle claims silently to avoid reputational harm. B. To reimburse the insured for defense expenses only if found liable. C. To provide legal defense even for allegations that may ultimately prove groundless. D. To defer legal defense until final judgment is rendered. Answer. Correct answer. C. To provide legal defense even for allegations that may ultimately prove groundless. Explanation. Under its CGL policies, the duty to defend is broader than the duty to indemnify. The insurer must provide legal defense from the moment a potentially covered claim is alleged, regardless of its merit. This is grounded in the Eight Corners rule, policy plus complaint. This duty exists even if court later finds no liability. Delaying defense, D, or reimbursing after the fact, B, violates standard industry practice and New Hampshire Department of Insurance expectations. Question 21. Upon closer examination, Mr. Thompson's workers' compensation claim was denied because he was found working outside the scope of his employment during the injury. Which principle under New Hampshire workers' compensation laws justifies this denial? A. Exclusive remedy doctrine prevents any claim for off-duty injuries. B. The injury must arise out of and in the course of employment. C. The policy excludes injuries caused by intentional acts. D. Temporary total disability benefits are not payable for self-inflicted injuries. Answer. Correct answer. B. The injury must arise out of and in the course of employment. Explanation. Under New Hampshire RSA 280 honor, workers' compensation benefits are payable only if the injury arises out of and in the course of employment. Injuries occurring outside employment scope, such as personal activities during breaks or unrelated side jobs, are not covered. The exclusive remedy doctrine, A, protects employers from tort lawsuits but does not cover non-work-related injuries. This legal standard limits coverage and is fundamental to workers' comp claims. Question 22. In a modern context of commercial crime insurance, is Patel's business suffers loss due to employee theft of company funds? Which coverage part of commercial crime insurance is most likely to respond? A. Forgery or alteration coverage. B. Employee theft coverage. C. Theft of money and securities coverage. D. Computer fraud coverage. Answer. Correct answer. B. Employee theft coverage. Explanation. Employee theft coverage protects the insured against losses caused by dishonest acts committed by employees. Forgery. A. Covers fraudulent signing of documents. A theft of money and securities. C. Protects against third-party theft, not employees. A computer fraud. D. Applies to electronic theft. This distinction is crucial and is defined in ISO Commercial Crime Forms CP0 series and consistent with New Hampshire regulation. Question 23. A key distinction between occurrence and claims-made commercial general liability forms is critical for Eastern Newin's risk management plan. Which of the following best describes claims-made form? And it covers claims for incidents occurring during the policy period regardless of when reported. B. It covers claims reported during the policy period regardless of when the incident occurred. C. It covers only claims occurring and reported within the policy period. D. It covers claims only after the policy has expired. Answer. Correct answer. B. It covers claims reported during the policy period regardless of when the incident occurred. Explanation. A claims-made form triggers coverage when the claim is reported during the policy period or an extended reporting period regardless of when the incident occurred, which could be before the policy started. This contrasts with occurrence forms A, which cover claims arising from incidents during the policy period, no matter when reported. This concept is crucial for professionals managing long-tail liability exposures explained in ISO 4 CG01 occurrence and CG02 claims made. Question 24. In summary of the New Hampshire Insurance Department's role, what is primary function regarding commercial insurance markets? A. Setting premium rates for all insurance companies. B. Licensing and regulating producers and insurers. C. Providing insurance policies directly to consumers. D. Handling all claims settlements within the state. Answer. Correct answer. B. Licensing and regulating producers and insurers. Explanation. The New Hampshire Insurance Department oversees licensing of insurers and producers, enforcement of insurance laws, and market conduct examinations. It does not set rates for all companies. Rate setting is sometimes regulated but often market-driven, nor provide policies directly. C. Or handle claims. D. This regulatory environment ensures consumer protection and market stability per RSA Chapters 400, 420. Question 25. For many years, business owners have relied on surety bonds for contract compliance. Which type of bond guarantees that a contractor will perform according to the contract terms? A. Bid bond. B. Performance bond. C. Payment bond. D. Maintenance bond. Answer. Correct answer. B. Performance bond. Explanation. A performance bond guarantees the contractor will fulfill the contract's obligations. Bid bond A guarantees the bidder will enter the contract if awarded. Payment bond C assures subcontractors and suppliers are paid. Maintenance bond D covers repair of defects after completion. Surety bonds are a risk management tool used extensively in commercial construction, governed by New Hampshire statutes, surety underwriting standards. Question 26. The interrelationship between hazard, peril, and risk is fundamental to insurance underwriting. Which best describes a peril? A condition that increases the likelihood of loss. B. The cause of a loss. C. The uncertainty of loss. D. The financial consequence of a loss. Answer. Correct answer. B. The cause of a loss. Explanation. A peril is the specific cause of loss, e.g. fire, theft, windstorm. A hazard A increases the chance of loss, e.g. faulty wiring. Risk C is the uncertainty about whether loss will occur. The financial consequence, D, is the loss itself or damage. Understanding these distinctions is critical for effective underwriting and risk evaluation, as outlined in standard insurance textbooks and NAIP models. Question 27. During the process of underwriting a commercial property policy, which characteristic must a risk possess to be considered insurable? A. The risk must be speculative with the possibility of gain. B. The loss must be definite and measurable. C. The risk must be catastrophic and affect many insureds simultaneously. D. The insured must have prior claims history. Answer. Correct answer. B. The loss must be definite and measurable. Explanation. For a risk to be insurable, losses must be definite, time, place, cause, and measurable so claims can be accurately adjusted. Speculative risks, they are not insurable because they involve the possibility of gain. Catastrophic risks, C, are often uninsurable or require special arrangements. Prior claims history, D, affects underwriting but is not a characteristic. Insurability itself. These criteria are foundational in insurance law and practice. Question 20. Among the various types of insurers, which entity is characterized by distributing dividends to policyholders rather than shareholders? A. Stock company. B. Mutual company. C. Reciprocal insurer. D. Fraternal benefit society. Answer. Correct answer. B. Mutual company. Explanation. Mutual insurers are owned by policyholders and may distribute dividends or surplus back to them. Stock companies A. are owned by shareholders who receive dividends. Reciprocals C. are unincorporated groups of subscribers sharing risk, and fraternal societies D. provide insurance to members with a social or religious purpose but do not issue dividends in the same way. Is distinct, covered in New Hampshire's insurance company regulations. Question 29. In an effort to manage risks from property damage, a business selects a deductible that is a percentage of the loss rather than a fixed amount. What is the primary benefit of a percentage deductible in commercial property policies? A. It provides better protection against small claims. B. It reduces premium volatility in high-risk locations. C. It incentivizes higher limits of insurance. D. It ensures the insurer pays all losses regardless of size. Answer. Correct answer. B. It reduces premium volatility in high-risk locations. Explanation. Percentage deductibles are common in areas prone to natural disasters, e.g. hurricanes, earthquakes, and are calculated as a percentage of the insured value or loss amount. They help spread risk and reduce premium fluctuations caused by frequent small claims. This form of deductible also aligns policy cost with exposure size, a concept recognized. ISO commercial property endorsements and state regulations. Question 30. In light of recent developments, Mr. Patel's business seeks coverage for loss of income due to government-mandated shutdowns unrelated to physical damage. Which statement best describes typical commercial property policy coverage in this scenario? A. Business income coverage includes losses due to government shutdowns. B. Physical loss or damage to insured property is generally required for coverage. D. Extra expense coverage automatically covers shutdown losses. D. Ordinance or law coverage applies to government shutdowns. Answer. Correct answer. B. Physical loss or damage to insured property is generally required for coverage. Explanation. Standard business income coverage requires a direct physical loss or damage to insured property as a trigger for coverage. Losses solely due to government orders without physical damage, e.g. pandemic shutdowns, are typically excluded. Optional endorsements or separate policies might cover such risks. This principle was reinforced during COVID-19 related litigation and is consistent with ASO CP 030 policy forms and New Hampshire Insurance Department guidance.